Wow, it's been a minute. It's been a minute. Hey, everybody who's joining. Get started here in a minute. My Doge wave going. I haven't listened to this in a long time. All right, good morning, everybody. Let's see how many people we actually get going live here. I haven't done a live in so long. Thanks for joining. Good morning. Good morning. So we're going to talk a little bit about why I think it's Bitcoin season. Is it alt season? We haven't looked at the alt season index in a while, but we're going to look at a little bit at that and a bunch of news, a bunch of things that I see going on. See a lot of people living in their max peak fear bear caves over here lately. So we're going to talk about what I think of all the fear and what's going on there. But good morning again, everybody. Good morning, Devin. All right, so let's get this party started. So I recently retweeted a couple of things from Credible Crypto. He did a video in November explaining why he thought November was going to be a bit of a top, and then we're going to put in a bit of a triangle pattern, something similar to what you see on the screen here. He did this way back in early 2020, I believe. But that would be a running flat structure and then continue upward. But what I thought was interesting is how he measured from the bottom to the top and from the peak, the timing. Is the way that he showed the his expected peak price of something like $190,000 at the end of this year, and he called late last year. So I've been trying to piggyback off that kind of mindset that maybe the cycle isn't so much dead, it's lengthening, but we're going to have a confluence of a couple of things. If something like this were to play out, right, what's going to happen is we're going to run up into the forward pricing that 2024 having. Now, Credible, he made the exact same argument. I just rewatched his video this morning, actually. He made the exact same argument I've been making, that the halving is well understood by the market now, and it is my opinion and also his opinion that the market is well aware of what the halving means now, and therefore in the next time we have the halving, it's going to be attempted to be forward priced in. That's the way it works when something's understood in the market, right? The market gets ahead of it and forward prices that new news in, if it's a known event coming. Now, if it was a surprise, a shock event of some type, right? So that would be a different story. But then we also have the spot ETF approval, which should be late this year or early next year. And that is obviously going to change the dynamics of this cycle quite a bit. Good morning. A lot of people coming in here. Good morning. So we're going to talk a little bit about what the implications of that are. I put this out a couple days ago. So the markets. It's interesting when I posted this chart. I'm still looking at this. My wicks are like red on this actual image on Twitter. That's bizarre. Some kind of JPEG. I mean, a PNG, or I don't know if it's a JPEG or PNG. I forget what kind of format these are, but kind of a weird issue there. But anyway, when you zoom out and you look at the structure of Bitcoin, right? We have been putting in a higher low for a while now, and it's not like this we just called a higher low on the first bounce. We made a bounce, put in a little bit higher high than this weekly green candle here, and then a low, but it was lower than the first low, or higher than the first low, and another bounce. You see several week impulse to the upside that took out a couple of prior impulses, downside impulses to the upside, and now we're putting in potentially another higher low as we come into this 37.7 to 38.4 key support area. So, when I look at this, I zoom out, this is a continuation structure, right? This is not a reversal structure. And I did tweet also, I'll put these bear flags out there, this, right? You look at the structure, everybody's talking about this is like 2018 or something. And this, I'm sorry about I just grabbed a random chart just to kind of quickly show this. I literally had my son sitting on my lap when I was putting this together, but it was a response. Somebody on Twitter asked me a question. I was responding to their question. I thought, I'm just gonna, for the sake of almost exaggeration, I'm gonna put a bunch of lower highs and lower lows on 2018 just to kind of show the structural difference. And you can see if you look at the very far left of my chart, you can see this bounce and then a second bounce. That's kind of more of a running structure, right? So you're making higher highs and higher lows, right? And that's what happens. These in 2017. I don't know if you guys were around in 2017. I was. I remember thinking, man. I mean, it was probably Bitcoin was like $3,000. I'm thinking this is like a blow off top. This is insane. It's going straight up. It's definitely got to come down from here, right? I mean, at that point, Bitcoin had just been going up relentlessly, and I was pretty big into Ethereum back then too. And Ethereum was just also going up. It's like, okay, this is some kind of crazy blow off top, and it would reset, but it wouldn't make a new low, and it just kept trucking. And so I see so many people looking for a breakdown, massive capitulation event, but you look at this massive capitulation event, it happened after multiple impulses to the upside, a reset, impulse to the upside, a reset, impulse to the upside, a reset, but it's this running structure, higher highs and higher lows. And then in 2018, you get this series of lower highs. You can never take out a prior high. It's just a lower high, lower. This is on the daily chart, but if you look on the weekly structure, it's very similar. And then you put a low, and then a lower low, and then a lower low, and then a lower low. On currently, the price action we have now, in my opinion, looks a lot more like, and the fundamentals as well. Both the fundamentals and the actual price action look a lot more like, late 2020. Or mid 2020, April through through October, both fundamentally and this kind of running structure. And you see this series of highs and lows being put in, but the lows you don't consistently take out prior lows. It's a running sort of formation structure. That's what I see here, and I don't understand why everybody keeps calling for a bear flag when on the monthly it is a valid bear flag. Let's go look at the monthly chart on Bitcoin. I want to be fair about this. This is a bear flag on a monthly. You can see the flagpole right there. And hold on, my music is retarded. This makes me angry every time I do this. All right. There's the monthly structure. Back to the monthly. Flagpole right here. Let me get rid of this stupid. I can't draw when that thing's on. And then you have your bear flag structure. So it is a valid bear flag on the monthly. It's only valid if it breaks the downside. Otherwise, it's just a reversal or uptrend structure. Now, I tweeted this because I kind of also wanted to highlight, if you're always looking for bear flags, this is, and it's, I think Lat tweeted, I see a bunch of failed bull flag structures too. When you have these very large, broad, like these are weekly structures, right? A big sell-off into you get some green bouncing around. A couple of impulses back and forth as the bottom is put in. It's done this a lot of times where it looks like maybe you're staring off the edge of a cliff, and it just bounces around this uptrend channel and just keeps on going, right? Breaks to the upside of it, or kind of keeps that formation, eventually breaks to the upside. It's happened a lot. Where if you look at 2018. That structure that you wouldn't have ever called much of anything in there really a bear flag. It was just kind of this, it was sitting on support and it was putting in lower highs and lower lows and consolidating, and all of a sudden it snapped to the downside. But then after it snapped to the downside, it put in like what looked like a bear flag. And I wasn't actively trading back then. Again, I was more on the tech side, trying to understand like what Ethereum was up to when they were just really getting started. But that was like early 2019, late 2018. And I remember just thinking that, I don't know what Bitcoin should be worth. I don't know if it should be worth $100 or $1 million. I got no clue, so I don't really care. But when this was happening, there were people calling for more downside. In 2018, after the big sell-off, it sold off to like, I don't know, what was it? I forget. Let's go zoom in here. Let's go back to 2018. We'll go on the weekly. Let's stick on the weekly for a bit here. Where's 2018? 27, that's 15, 16, 17. Right here. This structure, people were calling for more downside. Like, people were calling this a bear flag back then. I do remember that, like, vividly. People were going, oh, it's a bear flag, it's going to break down. I remember this vividly. and people were calling for, well, Bitcoin, this is it. This is the the peak euphoria. This speculative bubble is going to pop. It's going to go down to $100 or zero or whatever. Wow, it didn't break down. It actually started to break down. It just kind of consolidated sideways out of that structure. Now I think on the weekly it doesn't look as clean, but there was like some daily structure in here. But point being, after it doesn't look as clean here. Here we go. It's right here. People were trying to draw same thing. People were trying to draw flag poles and it's gonna break down to, what would that have been, like $1,200 or something. And it did break down, and then it went down a little lower, but not much. All right. So, my kind of the point is, just because it's putting in a structure. Now here's another one, right? I don't know if you remember people talking about this over here. But there's been lots of cases where Bitcoin bottoms out and it puts in an ascending structure or running structure. So the bottom is in, and then it starts putting in a series of higher highs and higher lows. That's an uptrend. That's a running structure. That's not necessarily a bull flag. Now, bull flags do exist, and when they do break, they're a good play. But they need to break first, right? So especially on a larger, macro structure on Bitcoin, trying to look for this break, when right now this is what the structure is, right? This is the structure we've got. It's currently a potential reversal uptrend channel. Now, if it breaks to the downside, that's where it gets interesting potentially. But this is why I'm putting this out here. Is there's a lot of cases where it looks like things are going to break down and it just goes sideways for a while, or it breaks to the upside. Back to so that's structural, like market structural, very big structural difference between 2018, the series of lower highs. The market could not put in higher highs. It just kept getting sold into. Over here, the bounces are getting bought, right? That's kind of what we kind of see happening. The bounces are getting bought up. So there's all your potential bear flags. I went back in time and just quickly looked at a few. All right. Heath was yeeing. It's kind of long in the tooth to be a bear flag at this point, even if that's your bias. Yeah. So Heath, as I said to Heath one-on-one directly a couple of months ago when we had kind of a little bit of a silly spat over nothing. I said, Heath, look, man, I'm not worried about you. You're going to be on the right side of the market. Whatever happens, I'm looking out for people that are a little bit more long-term, that are feeding into the fear. But yes, on the weekly structure, I contend, looking for the moving average, not going to help me with this one. This is not a bear flag on a weekly structure. It is on a monthly. Like I get okay, sure, it is. This is a fair bear flag on the monthly, but it's got to break to the downside. Otherwise, you're just sitting on a lot of monthly support. So if it breaks to the downside of this monthly, there's your bear flag. There's a flagpole, and it is getting kind of long in the tooth. The weekly, it never really was a good bear flag because these couple of green weeklies right here broke the flagpole structure. So if the bear flag on the weekly looks like this, I mean, it just brings you back down to these lows. If it were to break to the downside, we're talking about a very marginal sell-off from here. So nothing too terribly concerning. That's kind of my opinion. Now let's go look at more recent price action. I know this morning I had a bunch of thoughts. I did want to say that, to me, what's happening right now, both fundamentally on the fundamentals and on the market structure, I feel like this is a very similar kind of shakeout move because, a lot of people were watching this right here, this part of the bear flag. This is what they were watching for the bear flag, right? And this is not just, I know people are going to think that I'm talking about Heath here. I'm not. I see this post I've seen probably 20 people post something like this. All right, look, the daily closes right here, and then you get this breakdown below the daily closes, and then you start closing below that. Well, you remember over here, there was a lot of really important levels we were watching, and it got me. It got me because I said, when it closed the weekly, I said, oh, that's really bad. It closed the weekly below this level. But we were watching this ascending wedge structure, and I said, it looks like it's going to break to the downside because of that close, that weekly close right there below that weekly structure. And that ended up being a huge fake out and broke out to the upside. So the same thing I see very much here. You see that there's a lot of eyes on this downtrend, this uptrend daily close structure, and then we started closing below it, and now we're below it. So I see a lot of attention and focus on that. But I see, so it feels like this, talking about this support area. What's interesting is what ended up being the real level, what I want to highlight here. If you go back, I'm just going to go to the monthly chart. Let's go to the monthly. I'm going to delete these, or move these off to the side. Well, you get the idea. Get rid of those two. If you look at the yearly open, is this the monthly's not going to show it very well because it doesn't show it touching right there. Let me go to the weekly structure, see if I can't pull it out. There we go. No. Let me go to the go to the daily structure apparently. Okay, so if I look at January 1st, where's January 1st? Yeah, so the daily open price of Bitcoin is right around there. So just call it the yearly open was January 1st. Let's put a line. It's right around there. It wasn't it's not perfect, but close enough for government work. All right. So the yearly price open right there, that's actually the level we bounced right into. So this horizontal, remember this one very important thing. Horizontals are more important than trend lines anyway. But secondarily, this ended up being the important area the market was watching, and that's what gave us our second bounce on that kind of spring move out. But that weekly close and daily closes too, daily close below a lot of this structure over here in the weekly close was a trap, and it bounced the other direction. I'm seeing a lot of the same sentiment about this trend line right here. People are watching this trend line like they were watching, we'll call it the weekly structure was up here somewhere, right? And when it closed below that, people got absolutely flipped their lid. And then it bounced right back the other way. I see the same sentiment here as this is closing below this, but what I think is probably the more important structure, let me just remove all these drawings in this particular chart. I'm going to go to the weekly structure. I'm going to show you what I think is the most important. The most important area, I've been talking about 37.7 for a while on our Discord channel. I don't know if you guys have followed me on just Twitter or not on our Discord. I don't know if you've caught, I forget what I post on Twitter versus what I post in Discord all the time. And then I also forget what I talk about in videos versus what I post in text. But if you take everything else away, I think the single most important structure right now is this 3 weeks of price constriction. We had, a bounce off of the downside, a rejection off of the upside here, but did that put in a higher, a lower high right there a little bit, I think. But that 3 weeks of price consolidation right there, when we broke to the upside of that, we're coming back to test that level. If you take everything else off this chart, that's the area to watch. If you break to the downside of that, we're probably going down. If you hold that, we're probably going up. I mean, it's really that simple, in my opinion. It's not super complicated. And it's further supported by, again, we have this macro structure, right? So I'm just going to put on here highs and lows. And you tell me what kind of trend we're in, right? I know everybody thinks 20K or something, but here, let's do this. Let's just do this thing right now. High, low, high, low, high, low. I do want to answer some questions about how I manage leverage and try to talk people out of leverage a little bit as well. And maybe some alternate ideas. I had a question about this yesterday. But, you tell me, where's the downtrend structure? I'm not seeing it. Now, I see it locally, right, in this really strong sell-off. But this is a pretty continuous impulse to the downside. This is not really a downtrend. You can call it a downtrend. I do understand the people who call it a downtrend because we haven't taken out this high yet. Okay, on a weekly structure, they're right? So you had impulse to the downside, a bounce, impulse to the downside. You have not yet taken out that price. But on this set of weekly structures, this is definitely a local uptrend here. So confirmation of a broader uptrend would be taking out this 50 to 500 high. But you're looking for, at that point, you're getting an insane amount of confirmation. And what's going to happen is there are going to be a lot of people screaming when we take out this level, oh my God, it's full on reversing to the moon, rocket ships, blah, 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 blah. It's just going to bounce a little bit above it and have a pretty significant correction back down to some support that we've been talking about down here. some resistance level we're talking about now, most likely. So you're going to get lots of people chasing, lots of people thinking, oh my God, the breakout's real, after we've been saying it for forever. And then they're going to buy like crazy into here as we're taking some off the table. But nonetheless, I giggle because this happens over and over and over and over again. All right, let's see what we got here. Is my text in the way again with this whole, hey mate? Yeah, I'm gonna put this down here on the bottom right. Keen to get back into ADA at some point, but BTC is on my focus, only where I'm DCing. You're looking at ADA at all? Yeah, I mean, I flipped to the chart. I have it on here to talk about today, maybe if we have time. But I flipped to the chart. Thanks for the question. Appreciate it. From time to time, it's just in a really bad downtrend, right? So again, back to that macro structure on Bitcoin. This is a high. This is a high. This is a low. This is a lower low. I'm not really, I like it for the project. So again, I have two different things that I do, and it confuses the heck out of a lot of people. So let me try to be very clear about how I manage my portfolio. I have two active trading accounts. I have a spot trading account in Gemini. I have a leverage trading account in KuCoin, and then I've got funds scattered all over the dang place in different wallets and DeFi and cold storage and whatever else, right? So I've got stuff all over the place that I track. But when it comes to asset allocation, for me it's pretty much purely a fundamentals with a little bit of like looking at the technical levels type of thing. So I've gauged Cardano as one of the best potential projects, very long term, very, very long term. I've said it before, and I don't think I haven't changed my opinion on this. Nothing really has changed my opinion on this. If any project is going to overtake a significant portion of Ethereum's market cap, I think Cardano has the best chance. Because the reason I say that is it's so drastically different. How people, they just look at very surface level data, like, oh, it's a transactions and what's, I don't know, how many transactions per second, does it have smart contract? I mean, it's all like very surface level stuff. Like when you look at how it's functionally built, the framework of how it's built, it's just built different. It's like Bitcoin with full smart contracts and scalability all built into one. So it's like, and so it's a very different thing, and the governance model, its governance model is much more akin to that of like a Bitcoin or a truly decentralized project. So in the very long run, so I have a couple percent, right? A couple percent, I have a forever bag on Cardano that's in cold storage, staked, and it's just going to chill there until I die, basically, or till my son inherits my funds and decides to sell all the ADA for something more useful to him. I don't know. But yeah, so I have some ADA that I hold on to, and I'll hold on to forever. I'm not looking to buy it right now because the macro structure looks horrible, right? And when the macro structure changes, when we kind of confirm that we put in a bottom, at this point, when this type of structure develops, I have to wait for all the moving averages. I want full confirmation across the board. I want a series of local, higher lows, higher highs, blah, 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 blah. I want price above all these moving averages. I want price to confirm it's above these moving averages. I want all the moving averages moving in the right direction, and I want them all fading out in the right direction. And then I'm all about the buying. But until then, it's got a long way to go. So I'm not looking to buy Cardano or anything else that looks like this chart for a long time. This is one I did start buying because it doesn't look like this. Let me go to Avalanche if I can get there. So Avalanche, a little bit different structure, right? Same thing as Bitcoin. This is a dumb chart. This is a Coinbase chart. Let me find a better AVAX chart. Let's throw on Binance's. Let's get rid of this. AVAX and A0 are ones I'm buying because they have different structures. It's totally different structures. So when you have this much consolidation, I pay a little bit less attention to the moving averages. Because I accumulate under the moving averages when this structure is in place, right? So you can see it. Series of it's all these highs, these lows are getting higher. As long as that continues, I'll accumulate under the 200-day. So I'm trying to accumulate. I've got a small amount of Avalanche I've picked up, a decent amount of A0. This is my next big sleeper pick that I think is going to blow up monstrously huge. This is my opinion, not financial advice. Before I get too far into this, I totally forgot the whole. I'm rusty. Wow, I'm rusty, guys. Going live. Let's go over here. This is apparently a book that you can buy on Amazon, Living in a Van Down by the River. How to make any car or truck or or van your happy and healthy home. That's hilarious. Thank you, Daniel. Appreciate that. So, yeah, if you were to take my advice blindly without doing your own research, you're going to end up losing all of your money and living in a van down by the river. And maybe you can buy this book on Amazon and live happy and healthy by the river. But nonetheless, you'll be living in a van down by the river. All right. Let's go back to thanks. Hi, mate. Nice day. What do you think about the graph as a project? You spent a long time talking about it. It's good. The Oracle space is just dead right now. And I think the part of the reason the Oracle space is dead is there's a massive amount of potential influx and competition coming. So I still hold a bag of Chainlink. I still think it's undervalued. But other than that, I haven't seen any Oracle competitors really do well. So it's not something I've been really big into watching on. And again, let's put all this in context. Anytime you guys ask me about altcoins, you're going to hear me say the same thing. It's Bitcoin season. And this is my strong opinion, is Bitcoin season. Now, I guess we can go to that. Let's talk about that for just a second. Why I'm not really keen to talk about these altcoin projects. So thank you for the question. Good question. The graph is a very good. From a technical perspective, like technology, not technical analysis, but technology perspective, the graph is really cool. I like how they broke out some of the elements, but it's Bitcoin season. Bitcoin's been hanging out here at the bottom of this support, on the support structure for a while. When you look at the fundamentals, you look at a lot of the stuff I look at with the flow of coins off of exchange, the number of wallets, active wallets, or not active wallets, but wallets with a moderate balance in them, things like that. Just the overall adoption rate, derivatives, a bunch of other data. I mean, it's becoming kind of clear to me that at some point when Bitcoin does break out of this range, it's going to pull in a lot of altcoins. I think altcoins have been bleeding. What I think is going to happen next, my guess is that as Bitcoin breaks out, altcoins are going to stay stagnant. Some of them are going to even fall as Bitcoin is rising. We've seen this story before, right? It happened over here. I think you're going to get something similar, but possibly even bigger than this. That's my guess. Total guess. But I think altcoins are either going to bleed or stay totally stagnant while Bitcoin rises. And I think the next big move, because this has been down here so long, I think it's really going to be altcoins are actually going to lose value while Bitcoin rises. It's really going to break the hearts of a lot of people. And then what's going to happen is that people see that happening, they're going to eventually capitulate and sell their altcoins right as Bitcoin comes into some resistance area on this chart over here. Right as we're saying, all right, maybe it's about time to start buying some altcoins. You're going to see a lot of people giving up, selling their altcoins and buying Bitcoin and being all about Bitcoin all of a sudden after having been about altcoins for all this time. So that's my, again, let's look at some broad market stuff because I really want to get to some broad market talk here. Good questions, though. Thanks, guys, for all the questions. I haven't been in markets for a year. So did you and Jordan C-Team have a falling out at some point? You can say that. Hi, Brandon. Which platform do you use for A0? You can buy it on MEXC and Gate.io. I can use MEXC. Apparently, I haven't tried. I've been wanting to set up an account on Gate.io, put a small amount of funds on there so that I can trade and share the full ledger of trading with you guys. There's a lot of discussion about, if you're an influencer, you really should be sharing your actual trades. And I'd like to do that. I try to be extremely transparent about sharing my actual moves on Discord and Twitter so everybody can track, and I don't delete any of those. Like when I say I'm in a trade, it doesn't get deleted. It's just, if I take the stop loss, I take the stop loss, right? So you guys can go back and actually validate really how I've traded and how I've done, right? There are times I do better than others. Of course, all of us have times where we have some losing streaks. That's just the way it works. It's part of the game. It's part of the process. But you can go validate for yourselves all that. But I do want to do a little challenge on if I don't need a VPN for Gate.io. Speaking of Gate.io, I'm going to try to put a small amount of funds on there and just actively trade that and just post the actual ledger. So I may even be able to get on a live stream and be live trading and just sharing the actual, but again, it'll be a small representative balance just so you can see how I work through trading. But my being on live streams with me, watching me trade is really, really boring because it's hours and hours and hours of looking at charts and researching data and looking at fundamental data and charts and analysis, coming up with risk scores, probabilities, risk rewards, defining my stop losses and take profits and looking for when would I actually place this trade, what level is it going to be placed at, and it's like hours and hours and hours of work, and I take 4 or 5 trades a month. So trading with me is going to be really boring. That's the only problem with that. But I still want to be transparent about that. So I'm going to try to use Gate.io, which you can use Gate.io to buy A0. Just going to buy this book just in case. Eagled update. I still love Eagled. I've got a bunch of it. It's my biggest altcoin by like a mile because it's just undervalued. As simple as that. And you know, I'm enjoying yield farming on MyR. I had a lot of stables on MyR until I drained them all off to buy Bitcoin. But yeah, I mean, I love Eagled. It's the best risk reward I see outside of like something small like AVAX. Maybe not the best risk reward. I think AVAX is one that I think is going to grow, you know, pretty large over the next 5-10 years. That's why I want to start building a little. I mean, it's like these are like 2% and 1% bags, right? So I'm like, when I say I'm buying these, it's a slow, methodical. I'll be buying A0 for probably 2 years, right? That's my goal, right? I'm just going to keep, unless this thing has a massive absolute blow off top this cycle. This is like a couple year accumulation thing for me, and then AVAX is similar, right? I'm really looking at these for like 2025 and beyond. So I'm just slowly accumulating these suckers as time goes on. But on eGold, I have it's by far my largest altcoin, like by a mile. This again because the risk reward is just the best on that one. All right. Good morning, eGold update. Haters love to point out when you take stop losses. Yeah, they do. They sure do. But you know what? I'd rather take a little bit of the flack every once in a while and be transparent. Everybody know that I'm transparent. I'm not hiding anything than to try to hide something. All right. Let's talk about the macro. I made the statement earlier in Discord. Somebody was asking about, you know, the effects of how long inflation and the interest rates and interest rate hikes and how long it really takes for when the interest rates start going up, when does the market actually correct? Like everybody's looking for a massive market correction right now, and the Fed just made their first interest rate hike, right? We just went like to a half to 3/4, or no, we're only at a quarter to a half target right now, something insane low. Like, okay, they may raise by a 0.5 this month, supposedly, we'll see. But that's still below 1% base interest rate. Like, historically, that is tiny. It's going to take a very long time for those interest rate hikes to actually start to make a material impact on the M2 expansion. So M2 money supply expansion comes from two things, right? It can come from the Fed printing money out of thin air, but it comes from lending. And the lower the interest rate, the longer the interest rate, the more lending there is. And what's going to happen is as the interest rates start to go up, everybody's going to try to get in financing now before the interest rates continue to rise. So you're going to have this massive influx of people financing for houses, buying things at the last minute, companies financing right before interest rates start to go up because everybody knows interest rates are going up now. So you're going to have this massive influx and another little expansion of the M2 money supply. All that money supply expansion, if you look at the black line, this is the money supply expansion. I called it an unprecedented spike in a money supply expansion. Then Quinn said, well, it's not necessarily unprecedented. We have seen these 20% spikes in the past. I was like, okay, well, good observation. It's been nearly 100 years since the last one in 43. But, the 1800s, we can probably discount that. But anything since 1974 is really what's more interesting because that's when we got off the gold standard, right? So all this before there was on the gold standard. So, 1916, pretty big spike. You can see the big spikes in inflation that followed that money supply expansion. But notice what happened after 1916. We had the roaring 20s, right? And it wasn't until way over here in the early 30s that we had the huge monster correction and the Great Depression. And then the 40s was a response to wartime, and that actually created that spike in funding and a little bit of inflation there. Created a pretty prosperous time from the 50s through the 70s. So anyway, these big spikes in money supply expansion, these increase in both interest rates, you can see the interest rate and inflation, doesn't necessarily spell doom day one. It takes time for all that stuff to kick in. And so I think everybody got conditioned to following the Fed. Let me go pull up printer, burr. I'm going to pull up a GIF. We're going to do this just because I feel like it. You're going to wait 2 seconds while I pull up a printer, burr GIF. There we go. whatever, y'all get the idea. Money printer go burr. Everybody got so used to this. They saw the drastic reaction of the markets at the bottom. We're in the middle of COVID, and here we are. Everybody's scared to death. The markets are all going to crash. Everything's going to crash, and all of a sudden the markets start to rise in the middle of everybody's freaking out about COVID. And this is where everybody learned, money printer go burr. When money printer go burr, thing go up. But what people haven't thought through is that when the money printer stops, yes, things tend to slow down in their acceleration. But there's a huge, I'm just gonna pull this up, M2SL. Here's the money supply expansion. Here's the M2 money stock. This is total money supply, including lending and the Fed's balance sheet increases, right? Both things at the same time. That's up and to the right. That's going to take time to work its way back into the economy, right? And I bring this one out. This is the M1 supply. M1 supply is more liquid deposits, right? So this is actual kind of liquid of money available in the market, and this is the velocity of this is how fast it's being spent in the economy. So you can see here, because this is a bit of an outlier misnomer, because they did change the rules about how they count for M1V, but nonetheless, you get the idea. There was a steep drop off in M1, very liquid deposit velocity of money into the markets, and it is like flatlined over here. And it started to, I don't know if I can get a lower, but it started to uptick a little bit, right? So money is starting to make its way into the economy. This is where the long tail inflationary process happens, though, right? So inflation isn't done. These interest rate hikes are going to take a while, but as these interest rate hikes happen, spending will slow down. People will quit borrowing so much money for houses, so forth and so on. But that process takes some time. And so probably what's going to happen, you can see here, currently today, I think it's like 80% or 90%, I don't remember what the number is. I just looked at a poll recently. 80 or 90% of people in general expect the market to roll over right now. Now, when you have that many people expecting one thing to happen, it rarely happens, right? We are into support. Like, this is like let's just break it down to the very basic elements here. What do the markets actually look like right now? If I can get this chart to update. All right. So at this very moment in time, we put in a high, a low, a higher high, a lower high. That's not good. And then a high, and then a low, and then a higher high, higher low. All right. So this is the first, like, okay, this is not good. This is a high. This is a higher high. This is a lower high so far. If we were to take out these lows, that probably means we're going down to the next set of supports down here. But in theory, it's my general thinking that what's going to happen is these interest rate hikes, we're gonna have a few, and there's going to be some dovish talk as the markets come off and start to price in all those future rate hikes. So what you see here is the market pricing in future rate hikes, right? So we know, like in December and January, they hadn't hiked rates yet, but the market sold off massively on the forward expectation of that happening. And so this is forward pricing of those events in. As those events become known, that forward pricing will slow down. My opinion is that probably we get some bounce in the market, maybe even a marginal new all-time high, and then it rolls over much later than people think. And the narrative, I almost guarantee you, is going to shift here. As soon as we put in this bottom and start to wiggle our way back up, the narrative is going to shift. Oh, the economy's strong, jobs, unemployment's low, so forth and so on. We can, in the past, when interest rates were a couple percent, the economy did just fine. Actually, interest rates are good for the economy. You're going to hear all the talking heads flip their dang positions overnight, right? And that's what's going to happen as the market kind of recovers. And then as interest rates hit 3 and 4% and we're climbing kind of up here and maybe making marginal new highs or something, or getting close to the highs, whatever happens, you're going to hear a lot of people saying, here we go, we broke the highs, it's going to go up, blah, 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 and all these reasons why. And then they're not really going to be watching under the hood as the actual impact of the interest rates hikes start to take effect, as things start to really break. And that's when that type of sell-off happens. When everybody's lulled to sleep and talking about how, this is just consolidation, this is a bull flag, whatever, and then it'll correct in their face. But so there's too much bearish sentiment in my opinion right now. And this is not typically when things like to break down. Let's go look at the DXY. I said this morning, I think we're at the Pico top for now. I mean, of course, the DXY can go higher. It's the dollar, king dollar. The dollar can always go higher. Hold on one second, guys. Yeah. All right. Yeah, an alt season. Gene says alt season now would probably be the worst case scenario. That would be horrible. Well, an alt season right now would mean that the markets are just dead. Like everything's about to collapse to zero. It would be very bad. All right. The reason I think, it's just a historic level, right? So we've broken through a couple times, but we've had this structure of resistance right through here. And not that I don't think the dollar can't break through here, I certainly do. But when you have this large measured move straight up like this, it almost inevitably is going to meet some initial resistance. And the reason I say that, you can look over here at like something like the euro, which is the number one pair that people trade against the dollar, right? The euro. It is coming into support, just like the dollar's coming into resistance. You look at how fast and how strong this sell-off is in the euro versus the dollar. You've had these type of big sell-offs before, and then you get this bounce. Typically, most often, it's going to bounce here. Now, it could be a weak bounce, and then the euro could actually finally go and lose this level. Same thing here. It could be a weak downside bounce, and then it bounces back up. I don't really know. All I know is that at this moment in time, with this move, as strong as this is right into this strong resistance, we should see some resistance here, and it should come back, a portion. Let's go throw a fib level on here. Let's just call this the move. So 0.5, 382, 98, maybe somewhere in that range. You see right there that little bit of consolidation that happened. So possibly a good place to look at if it's gonna put in a bit of a bottom on some support and then bounce back through there. But it should reverse and retest some of these support levels before too long. The possibility exists that it does just break through right here, a little bit of resistance, to come back and test it. That's the other possibility. But I do think we're probably just as strong and as fast as this move was. The market is kind of over forward pricing in some behavior, so I think that's what I'm seeing. Aren't you from the USA? I am from the USA. Good morning, Forrest. I don't know if Forrest is. Forrest Gump? I don't know. Aren't you from the US? I'm from the USA. Some kind of NFT collection spam. Thanks for the answer. Another one is, you still hold LTC? No, I'd never hold Litecoin. Let me make this very clear to everybody out there. I've said this a couple times before, but I do not hold Litecoin. Ever. Don't hold it. I just trade it. That's it. That's all. It is just a structured trade for me. And the reason is it's highly liquid. I explained this to somebody in my Discord, some people in the Discord channel a couple days ago. There's two reasons I look for a large liquidity, and the biggest reason is actually for the downside protection. So I used stop limits. So for a long time I tried using stop limit orders and putting a little bit of a delta between the stop limit orders, and it works okay if it's Ethereum, Litecoin, or Bitcoin. But the problem, hold on one second, my music died again. The problem with y'all can't hear the music, right? Good. Okay, never mind. The problem with illiquid things is a stop loss side of it. And so I've been using, because I've had a couple of times where big sell-offs, and with crypto is pretty illiquid compared to like equities or forex, especially forex markets. When there's a big sell-off that happens, your stops, even if you put a delta between the stop loss, the price, the limit price, and the actual sell price, or the strike price and the sell price, I've had them slip on me. You see this big red candle right here on the weekly. These big red candles that will slip these orders on you. So I've turned all my orders into just stop market orders, because I don't want to mess with this happening again. It's happened to me. I lost way too much money over here on a big red. Where was it at? Right here. This big red candle, I had some stop loss orders that I didn't really properly do when I first started with KuCoin, and it was supposed to stop me out right here. I ended up having to sell down here, literally. I mean, it was like the biggest loss I've ever had. And this was, yeah, I think I hit another order down here. It's insane. This was because a stop loss slipped. It was right here. and it just slipped. Like I had a limit order and it never filled, and it was like the most insane thing ever. And it ended up filling me out here at the bottom. So I was just really aggravated by that. So I moved all. This is what caused me to say, you know what, forget this. I'm doing all stop market orders, and because of that, I have to have highly liquid assets, or the slippage on a low liquidity asset when a sell-off starts is massive. But if you're doing stop market orders on highly liquid assets like Bitcoin or Litecoin or Ethereum, the slippage is really minimal, because I very rarely get stopped out on a big massive move like that. It's usually pretty close. Like it's usually a pretty mild sell-off. It's just hitting that level, and it's usually very close to the price it actually executes at. But anyway, point is, I never hold Litecoin. It is just a trade, but I trade Litecoin so actively because it's so liquid. It's highly traded all over the place, like Ethereum. And I think those are the three, right? I don't know of any cryptos that trade with more liquidity than Bitcoin, Litecoin, and Ethereum, frankly. So I can very confidently put orders on, and my stop market limit, my stop market stop losses, and can go to bed at night and not worry about it. Like if Litecoin wants to tank massively, I might slip $1 or something on the stop market order, but it's about all I'm going to slip because it's that liquid. So I'm not going to worry about it too much, right? I go to bed, and if it stops out and it's massively down or whatever, I don't really care the next day. So but I never hold Litecoin. I have never ever held Litecoin ever. It doesn't I've said it a million times, I don't see the use case for Litecoin when Bitcoin exists, especially when the Bitcoin Lightning Network exists. I don't see a long-term use for Litecoin. Now, we were tracking this MWeb upgrade. The MWeb upgrade was it adds some privacy, it adds some functionality to Litecoin, and I thought maybe that might cause it to pop a little bit more. Market did not care, clearly. So yeah, my last trade in Litecoin was, I don't even know when. It's been a while. I think I played some of these bounces somewhere. I don't even know where it was, frankly, but I've been out of it for a long time. I've been watching it though. The reason, so if you're asking me about, I think the reason you're probably asking is it's slightly green versus Bitcoin here. So when it's Bitcoin season, Litecoin is one of the better trades as well. So this is a valid question, actually, really good question for this fact. Let's talk about how. Let me move this out of the way so I can see that chart. Let's talk about what to do with the Litecoin trades, right? Moving here, let's look at the Litecoin chart, because this is going to set up and be a good trade. It is going to be a good trade very soon. End of story. I don't care. I don't hold it, but it's going to be a great trade here pretty soon. It's been consolidating. You see here, it broke to the downside of this. This is also why I've been just completely out of it. When it broke to the downside of this 2017 all-time low weekly close, I was watching that level. When that sucker broke, I'm pretty much done with it, right? I don't really short. I'm pretty much a long only. So when things get uninteresting like this, I go yield farm or find some other way to get my capital back. I don't really short. But this would have been a really good candidate to short this sucker underneath that key swing level. But when it does decide to break back above that level, it is going to be a really good trade, because on the tail end of Bitcoin season, what happens so far every time, it doesn't have to keep happening, but as Bitcoin comes into exhaustion, right after Bitcoin's made a big run, it's this human nature thing. People go looking for something that's like Bitcoin that is not as much money, right? It costs less. And so that's what happens every time, is that Litecoin comes chasing Bitcoin's price. So every time Bitcoin makes a big move, this huge move in Litecoin was after Bitcoin started rolling over here in May. And then Litecoin made this massive move, right? But Litecoin was lagging behind, and then as Bitcoin started rolling over its rolling top, that's when Litecoin really started ramping up, right, all through here. And so this is what Litecoin will do every time. People, when it's Bitcoin season and people are very focused on Bitcoin, the next thing that they look at is Litecoin, because it's like Bitcoin. The truth of the matter is, to its name, to its credit, it is the closest thing to Bitcoin that's not Bitcoin, right? It is a pretty fair proxy to it. It's properly decentralized. It's got a lot of the same properties. I don't hold it because I hold Bitcoin, but it has a lot of the same properties. So there's a lot of reasons why people who really like Litecoin really like Litecoin, and that's fine for them to like it. But again, to me, it's just a trade. So it just chases Bitcoin's price, the November price spike. So I mean, two of my biggest winning trades, and all of the whole on anything outside of Bitcoin, my two biggest winning trades I can think of outside of like altcoins that I held for like 20x or 100x gain. Those a few rare instances where I had like 100xers were probably the biggest winners. This trade right here on Litecoin, and this trade on Litecoin were two of my biggest wins outside of 100x altcoin wins or massive Bitcoin trades, right? And it's a really good trade. It's just you have to catch it at the right time, and it's when Bitcoin's in a downtrend. It's not the time to catch it, right? When they're a local downtrend, it's when Bitcoin makes this big move. It is in exhaustion. This is when Litecoin starts to really do its thing. These rollovers right here are perfect. You buy when you start to sense this slowing momentum on Bitcoin. You'll start to see the Litecoin chart start to get real exciting looking, and that's when you want to buy and get into Litecoin for those trades. And those trades last from like here to here, right? It's like this duration of trading time. That's all you got, and then you're back out. So if Bitcoin does what I think it's going to do and moves to the top of this channel, so I know other people calling for all kinds of other numbers. I've been watching this channel for a long time. I think not this YouTube channel, this uptrend channel. I think at least we're going back to 72,000. That's kind of my opinion. Maybe 73,000. Come back to the top of this channel is where I think we're headed next. When we get close to it, you better believe I'm going to be in some Litecoin trades. Because even if we consolidate under it, like the more bullish people would think that we're probably going to consolidate under it and then break out to a big giant blow off top, which I suppose could happen. But when this exhaustion happens, whenever we hit this resistance, that's when Litecoin's going to probably make its first nice, really big move versus Bitcoin. But otherwise, there's just no point owning Litecoin when you own Bitcoin, in my opinion. All right, good question though, great question. I liked answering that one because that's. I've been kind of keeping my eye on Litecoin, but I'm not super, not something I've talked about much lately because it's just there's no setup. There's no setup on it. Alt season would be a bad deal right now. David Hunter forecast. I don't know who David Hunter is, and I don't know what his forecast is. I guess I can go look it up. All right, let's wrap up, guys. It's been going on for a while here. Let's wrap this thing up. Did I miss anything else I wanted to talk about? Central African Republic. You can see here on Wikipedia, their currency is now Bitcoin, in addition to their, I guess, Central African franc. All right, I think that's all I had to talk about. So thank you guys. Any last minute questions? Otherwise, let's wrap this thing up. Oh, Fidelity. New mortgage products let Bitcoin holders, blah, 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 Bloomberg. No, I'm looking at there's the Fidelity news thing, big deal. Fidelity is allowing people to hold Bitcoin directly in their IRA. And there was some other news about a bank doing some what's the word I'm looking for? Not deposits. Custody. So there's a bank doing some custody service stuff that we talked about. All right. Thanks, everybody. Let's throw on the outro Doge Wave music here, and we will see you next time. Look at Bitcoin's coming back off. What's dollar doing here real fast? Let's take a look at this while we are live. DXY is coming off. Yeah, so DXY is coming off here. The markets are coming off a little bit. So, okay, Bitcoin's being drugged down by the equities markets, retesting supports. And then Bitcoin is coming back into, look at my main Bitcoin chart. Hold on. This is my Coinbase chart? Darn it. I accidentally deleted all my stuff, so I don't know the levels anymore. Yeah, so it got rejected off this daily right here. And so we have an initial rejection on Bitcoin of this daily level, this daily, like what I call a key pivot level. This little doji candle right here is what gives us the key pivot level, in my opinion, right? So we gotta get back above that. It's a key pivot, so it keeps getting rejected off of that. I bet you anything, funding is through the roof right now. Negative. I bet the shorts are piling in right now because they were earlier, man. They were piling in. Binance is positive, which, interesting. That's probably lightly positive, I'm guessing. So OKX, Bybit, FTX negative. This smaller exchange, DYDX, is positive. This one flips so fast back and forth. I don't know if I can get much out of that data. Gate.io is negative. OKX, Bybit on the token margin, mostly negative. So it's mostly negative, kind of mixed right now. I bet when this calms down, you're going to see a lot of negative funding right here. So the other thing too, I want to say something about the Bitcoin chart here, then we're going to go. The other thing to look for is you see these swing lows over here. The other thing I've been, and I think crypto, what's his name? Credible Crypto talked about this too, and I was looking at the exact same thing. These 3 swing lows are candidates for a quick takeout and then bounce. So I've kind of been watching 36K. It's like, all right, if we get a really quick sell-off, like you see here, these giant wicks that we had, we get a third giant wick, it could go all the way down to 36K, take out these prior price levels, and then bounce. That's something I've been kind of watching for to happen. And that's going to be back to that whole thesis of this whole fake out right here. People freaking out over here when that sell-off happened. I think the same thing very well might happen here if we break this kind of wick down below this. We don't want to close a daily below this though. That would be a little more problematic. But it again, looking at the history here, I could totally see it fooling us and doing that, closing daily like right here, and then bouncing very much the next day. But we'll see. That's the level I've been waiting. I'm waiting to see if we take out, bounce to 36.5 or so. The momentum's probably going to carry us a little bit below that bottom wick right there. Get that liquidity and then bounce. Something that could very much happen. All right. Thanks, guys.